Hey everyone, welcome back to Corporate Decoder. Today we are diving into the world of packaging, but don't worry, it's more exciting than cardboard sounds, unless maybe you are into that. We're cracking open Packaging Corporation of America's proxy statement to see what's up with their directors, executive pay, and a little bit of financial health. This document is essentially the company's invitation and rulebook for its annual meeting of stockholders. Think of it as a permission slip to see what the company has been up to and how to influence its future. First off, a cordial greeting that invites all stockholders to the annual meeting in Lake Forest, Illinois. Important matters like electing directors and approving executive compensation are on the agenda. The main item here is electing 10 directors to the board. The document gives some background on each nominee. For example, we have Mark Kazan, the chairman and CEO, who has been with the company in leadership roles for decades. Then there is Cheryl Beebe, who was CFO of Ingredion. She brings lots of financial experience to the table. So if you own any stock at all, that would be a plus. It also stresses the independence of most board members, meaning they aren't directly employed by the company, helping ensure decisions are made in the best interest of the stockholders. The board met 4 times during 2024. This part also mentions that all directors attended at least 75% of the meetings, which are good signs. The document also dives deep into the compensation of the top dogs, so it's only fair to take a look at that. The compensation committee makes sure the executive pay is tied to performance. That way, in theory, if the company does well, the executives get rewarded, and if it doesn't, they don't. The compensation committee, which decides how much the top executives get paid, met 6 times during the year. This committee is composed of independent directors. This is to avoid management from being in control of their own salaries. Let's talk about the money. The company paid KPMG roughly $3.8 million for audit services. This is a normal expense for any public company and includes checking the financial health of the business and confirming the company accounts are in order. Stockholders get a non-binding vote on executive compensation. This is the so-called say-on-pay vote, which is a way for investors to voice their opinion on whether the executives are being paid fairly. The proxy statement contains a detailed review of how executive pay is decided, what the goals are, and how it aligns with the company's performance. It stresses that executive compensation should vary according to performance. If you look at the documents, you will also see that it lays out the different parts of executive pay, like salary, bonus, and stock awards. The structure of the executive compensations has an emphasis on long-term performance with equity awards. This means stock grants comprising the majority of compensation. It also means there are policies in place to prevent executives from hedging or betting against the company's stock. To make sure they are competitive, Packaging Corporation of America compares executive pay against a peer group of similar companies. This helps them see if they are overpaying or underpaying their executives relative to the market. Okay, let's check out the summary compensation table, which contains the names and principal position, salary, stock awards, incentive plan compensation, change in pension value, and all other compensation, as well as their total compensation. Let's look at Mark Kazan, the Chief Executive Officer in 2024. He had a total compensation of $15,660,000 and comes in second with $10,960 and $170 and $470. We can also peek at what is in store. We see estimated future payouts under equity incentive plan awards. These are estimates of what executives could get in the future based on company performance. It is often based on metrics like earnings per share, return on invested capital, or total shareholder return, or TSR. Let's talk shares. The Vanguard Group is the largest stockholder, owning more than 10% of the company's stock at 12.5%. Following that, we have BlackRock at 10%. Finally, we'll check out any related person transactions. These are deals the company has with people connected to their executives or directors. For example, the son of an executive is employed by the company. With a compensation of $522,000 sinks now, what are my thoughts on PCA? The company seems to be in a decent position. Their emphasis on operational efficiency and returning value to shareholders are positive signs. And executive compensation seems pretty aligned with company performance metrics, which is what you like to see. Active. That being said, it's always important to keep an eye on things like debt and how they manage these risk factors. Overall, PCA presents a fairly stable picture. It's not the most exciting story, but it's one of steady management and focus on shareholder value, but you should definitely take a deeper dive and make your own conclusions. That's all for today's Corporate Decoder. I hope you enjoyed unpacking this proxy statement with me. If you did, make sure to hit that like button, leave a comment and subscribe for more deep dives into the world of corporate filings.